Okay, hello everyone. I wanted to make this quick video on IPOs, specifically how I bottom fish new IPOs. A few days ago, I posted kind of a general video on how I like to bottom fish some deep pullbacks below the 50 MA, and there was one example all the way down to the 200 MA moving averages. So I'll link to that video from a few days ago at the end of this video. Um, so you'll get to see that. But with new IPOs, you really have no 50 MA, no 200 MAs for reference. These are fresh IPO that are out days, weeks, and sometimes those IPOs set up some powerful moves. Now, just warning, Um, these setups fail more often. IPOs are a lot more volatile, a lot less predictable, and it's really their success rate is low from my own experience. You can go do your own studies and figure out the success rate, but IPOs success rate from a swing trading perspective, position trading perspective is pretty difficult in my own experience. So I like them when I target them. I like them to move pretty quickly. But when they do move, they put in some serious um, moves, some serious alpha. So I wanted to show you a new trade that I took recently. Got me stopped out a little bit less than break even, 2-3%, I believe it was, for a loss. 2-3% on an IPO, fresh IPO, is pretty tight. That's like almost break even um, on a non-IPO stock. So let's go through that. And then I'm going to show some precedents to that exact setup that I took a few days ago and why I took that setup. And when I see something that is imprinted in my head and I have seen before work, nothing works 100%. Like I just said, IPOs fail more often. But when I see a setup that has a potential, I'm taking it. I will set my risk, low risk entry, set my stop, and I just let the trading gods handle the rest. Don't overthink it. It's why you practice. It's why you have stocks that you print screenshots of and you go back and you study over and over and over because you do that because when you see the same setup again, you want to be able to take advantage of it. So let's move on to the charts examples. This should be quick. But before we do that, go through the disclaimer. Again, do your own homework, your own due diligence. This is not recommendation to buy, sell, hold any security that you see on this clip. All right, let's jump into trading view like we always do. We are not going to do uh, Market Smith today. We're just going to dive into all the IPOs that I have model charts in my model books. So the stock that I traded is ARM, set up a few days ago, and this right here. So I'm gonna use the replay so that we can take a look at the stock, how I was looking at it. This was the stock setting up. And for IPOs, for scaling, since it's new, there's no bars before and bars after. The bars look really stretched and very high range. So I normally like to try to scale it myself into an appropriate scaling as if there was candles before um, the, uh, the IPO. But this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, a couple weeks, very early. I'm going to show you examples of stocks that set up exactly like this and resulted in enormous moves. Very well-known stocks in today's time, but obviously when they were IPO, they were not known stocks. So we'll go through them in a minute. So this is how this was setting up. And I consider this, the really bottom fish. And it's just the IPO pulling back. There's really no base, potentially rounding up the bottom. And if you guys watched my, like I said, my previous video on how I bottom fish, that's how I like to do them. So I traded this, took this on this day. My stop limit in the market got triggered. Looks really good, pretty excited about it. And then the next day we see this. And like I said, high failure rate in these IPO setups. I do trade them really, really tight. My stop was, initially my stop was below this right here, so it was about 5.5%. But on this day and on this day, I moved it down below this, and I think it was around 3% where I got stopped out. So I was out of this trade, pulled back all the way. Let's see here, how far did it pull back? So it pulled back from my stop, from my entry all the way down to here, pulled back about 7%. I would have definitely been stopped out. Obviously, if you're low down here, that's too um, just too much for me. It's about 9%. I wouldn't do that. So in the rearview mirror, you can take a look at this and say, oh, I should have had my stop a little looser all the way down to 9%. That's not how I operate. You manage risk in real time. Um, I made a decision to have a tight stop. I moved it even tighter when this came out because I want them to go right away, and I got stopped out. So fast forward to today, this is doing potentially failed reset, failed pullback reset. Tried to go out here, squat it, and now it's moving out. You can also take a look at it a different way. So potentially in the future, this could look something like this. And now it's setting up the breakout, right? So this is why when you look at stocks after the fact, weeks, month, and you were not watching them when they were evolving, you potentially would have not seen this, right? Your eyes would have probably saw this, especially if this, sets up here and breaks out. When you come and take a look at this stock 4 or 5 months from now, you probably would not have seen this, right? But I traded this and I got stopped out because it was setting up beautifully, right? I just showed you that. It was setting up beautifully. But looking at stocks after the fact is always different than looking at them in real time. That's why it's hard to trade in real time and it's easy after the fact. All right, let's move on to the examples. So remember how this looks, okay? And then let's take a look at the first one, Google. Neat trick in TradingView. If you just click on this right here on the calendar and you put like a really old date, put 1990 here, and you hit go, it takes you all the way to the first available bar for the IPO. This is how Google was setting up. How close is that to what we have seen on ARM? Like, I mean, almost exact setup, right? And this goes out, you take the trade right here, and your stop is really tight, right below this low or right below this low. That's 3%. So that's exactly like ARM, right? And then what does this do? Breaks out, never looks back. Okay. Hesitate at the previous high. Just do that. Yep. Hesitates at the previous high. And then it really just kind of goes. It just never looks back. Okay. So what are you doing here? So we've got 3% risk. Okay, and let's just assume this is the end of the move here. You got 3% risk to 94% reward. That's why I like to take these when I see them, because you can be wrong 10 times and still make money. Okay. So this is Google. So again, just to refresh, we're gonna go back all the way, and then just have that kind of gets registered in your brain a little bit. That looks exactly like ARM. Let's take a look at the second one that I wanted to show, Twitter. We all know Twitter. It's delisted now, but let's go back to its IPO. Again, 1990, click go to, takes you right there. How similar does this setup look? That's also bottom fishing the IPO. Okay, so you play this. What's this stop? Take this coming out. Stop is below. That's 4%. What does it do? Breaks out, never looks back. That's why I want tight stops. Okay, and let's see what this does. So let's just assume you only took this piece here, 4% to your risk of 78%. Okay, let's take a look at another one. eBay. And again, no one knew eBay at the time. No one, well, potentially quite a bit of people knew Twitter, but I assume it wasn't as famous as it is today. X right now. eBay. How many people knew eBay back in '98? I definitely didn't. How similar does this look? The arm. Let's again do the replay. Again, bottom fish in this. What's your stop? This is pretty wide. 12%. Doesn't look wide. Seems like eBay was really a wide, high average true range. That was 10%. That's pretty wide. Doesn't look that wide, but it is. But let's take a look at the reward to risk. Obviously, I didn't trade this in '98, but you see what eBay did here. Let's see when kind of topped, and let's take a look at, figure out if you held through this, and now it's breaking the 50, you're out. So let's take a look at this. So 10% to 820% over here on this shooting star. That's 600%. Okay, that's what I said. They do monster moves when they work. You notice that all of these examples that I went through, when they go, they never look back, right? So when the horse leaves the race gate, doesn't back into the gate. Let's take a look at one more here. Let's take a look at Amazon. Again, these are all known names that were not known at the time. Let's take a look at Amazon. Again, this is a little bit different, but you can argue that here looked like what ARM is now. And then this is your failed reset and coming back out. But let's just take a look at this piece here. Not the same, but almost similar setup. And then comes out and really just kind of sets up again here. But we'll just take a look at this. So this is 7% to 60%. And then the last one that I wanted to look at, that is a model stock from Mark Minervini's books. BB stores. I love this. It has quite a bit of setups as an IPO example, but this is the example right here. Looks very similar to ARM in our day, almost the same. Let me grab this here and just fix this, right? Take this up a little bit. There you go. And that's your pivot bottom fishing on the IPO. And then comes out, never looks back, and it just goes. Obviously, just like I said, IPO is pretty volatile, but if you take a look at this move here, this is a 4% stop, 5% stop, and then you're targeting 60% move up. So That's why when I saw ARM right here, and I am someone that have a lot of model stocks, in my head, I saw Google, I saw Twitter, I saw eBay, and I saw BB. Those are the four stocks that flashed right in my head. And I'm like, I'm taking this. And it doesn't matter if it stops me out because I'm risking 3% to make 60, 80, 90, 100% on my risk. So I was pretty excited about this setup. Disappointed that it did not work, obviously, but um, continue to watch it and see how it evolves. It's very young, potentially good setup again, like I showed you guys. So anyway, I wanted to kind of show you that while ARM is still fresh in my head, and kind of give you an idea on what drives my decisions. Right? It's not in vacuum. I don't just go buy a stock because I want to buy a stock. I buy a stock because it's telling me something. It's reminding me of something. It's setting up the way I want it to set up. It's exhibiting behaviors, whether that's from a price or volume or RS, behaviors that I have seen before in successful setups, in monster stocks, in um, stocks that moved um, and showed alpha in their moves. That's why I take the trades, not because, eh, there's an inside day, or there's a tight candle. Um, that's part of it, but that's not the reason. There's a lot that goes into that. There's a lot of experience, a lot of um, chart studying and chart flipping and um, setups that you see over and over and over. So hopefully that helps a little bit. And like I've always been saying, I want to keep those videos educational, beneficial. Um, there's a lot of channels out there that throw 20 names at you and every day and say, yes, list for tomorrow, focus list for tomorrow, and they throw 20, 30 names at you. Um, I've never, and they spend 1 minute on every name. Um, if they do, they have 20 names, spending 1 minute on a name, it's 20 minutes for the videos, waste of time. I'm hoping that these are useful. Please, if you like them, like, subscribe, spread the word, um, and I really appreciate you watching. Thank you, and um, I'll talk to you later. Bye.